Remember what happened in nickel on March 8th? Well, this letter came out on that same day, March 8th, 2022. The title from the European Federation of Energy Traders. This is a collection of brokerages that trade energy, paper, like Trafigura and other firms, and they make money by making markets and taking commission from both sides. They are running out of liquidity and they don't know what to do. How much silver JPMorgan can squeeze into the SLV ETF before it runs out? How much did it claim to squeeze into SLV on the day of Silver Squeeze 1 in February last year? Commodity traders sounding the red alert, asking for immediate bailouts from all their governments all around the world. The United States in the lead in global food price inflation, and a potential platinum squeeze in 3 trading days. This video is sponsored by BlackRock Silver, which just came out with an announcement of the inclusion of the Victor vein system into upcoming maiden resource estimate at Tonopah West, one of its main resources that it is developing at Tonopah West in Nevada. The modeling of the many gold and silver intercepts reported to date at the Victor vein system demonstrates sufficient vein continuity for inclusion in the upcoming maiden resource estimate at the 100% controlled Tonopah West project located at the Walker Lane Trend of Western Nevada. BlackRock Silver is a silver exploration company. It's been doing well as silver has broken out, and it is 57% invested by institutional investors, including Eric Sprott. It basically means they have more silver than they thought before. And let's get on with the silver report. SLV, as you probably know, is controlled by JPMorgan, and in its New York vault, here we have the silver bars listed in the SLV ETF. You have one in New York. In its New York vault, there are 102,837 bars, supposedly totaling 103,176,000 ounces of silver. Now, if we look at the total eligible stocks of silver in the JPMorgan Chase vault in New York, we have 142,239,908 ounces. Those that I read before in the SLV ETF are already accounted for, and they are not registered because registered means for sale against futures contracts. SLV bars cannot be for sale because they belong to SLV. So you have a total of 39,063,655 ounces that can be shuttled into SLV from its New York vault. Now, how much did SLV put into the SLV ETF? How much did JPMorgan put in there on the day of Silver Squeeze 1 in February? That black rectangle, that is Silver Squeeze, that is the shuttling in of silver into the ETF, totaling 112 million ounces, about 3 times what JPMorgan has left in its New York vault. Now, it is possible theoretically that a lot of that silver came from other vaults in London. We just don't know, but we're very close to squeezing SLV to death back in Silver Squeeze 1. And there is more silver in it now. It has been trending up since the beginning of 22 by what looks to be about 30 million ounces. And that is about how much it has left in its New York vault. The next piece of news is from the European Federation of Energy Traders. Remember what happened in nickel on March 8th? Well, this letter came out on that same day, March 8th, 2022. The title from the European Federation of Energy Traders. This is a collection of brokerages that trade energy, paper, like Trafigura and other firms, and they make money by making markets and taking commission from both sides. They are running out of liquidity and they don't know what to do. The title: access to short-term liquidity provided by central banks will maintain the function of EU energy markets in the light of the recent extreme development of wholesale prices. March 8, 2022, the same day that nickel blew up. Summary: high and volatile wholesale energy prices are leading to intolerable cash liquidity pressure for energy market participants. Basically, they are afraid of going bankrupt if they get caught in an energy short squeeze, and that's when paper energy markets will break down, which means that the physical price of energy will conform to physical reality rather than to paper markets all at once, and that is a price squeeze everywhere, including eventually in gold and silver and the dollar itself and fiat currencies. So this is getting close, and they are sounding the red alert here. Now, if we look at the food price inflation situation, which I believe is the most accurate in terms of the actual price inflation levels, because you can't really substitute for food, everyone has to buy food. You have the leading countries in the price inflation rate, the hyperinflationary countries of Argentina, Turkey, and third, Mexico, which is the silver producer leader. And high prices there will discourage Mexico from exporting its silver. Then you have Russia, which is at war right now. Fine. Then Brazil, and then the United States, almost at 8% food price inflation. So the dollar is incredibly weak right now, and it will only get weaker from here. Another situation I wanted to bring your attention to is not often looked at by the gold and silver crowd is actually platinum. You see here that since 2021, since late 2021, there were about 725,000 ounces of platinum in the storage in New York, that now we are down to 424,677 ounces. That's about 300,000 ounces physically removed from the vault since then. That is an enormous amount more than has ever been removed in the platinum market before. Now, according to my math, we have 10,325 warrant deliveries since July 2021. Since that point, when platinum deliveries were at a high, or when platinum stocks were at a high, we've had 10,325 warrant deliveries. A warrant is a contract. Each contract in platinum is 50 ounces, not 100 ounces. So, given that we've had 10,325 deliveries since July 2021, when ounces were at a peak, and we've had 6,000 contracts worth move out since then, that means about 60%, a little bit less than 60% of all deliveries in platinum have been physically moved out of the stores. Now, where are we now? That means that the platinum market, at least in Comex, is mostly a delivery market right now. Here's the current situation in platinum. We have 3 days to delivery. We have 14,525 contracts still open. And how much platinum do we actually have? We said 424,000 ounces. That's about 8,493 contracts available to deliver, and only 5,312 of those are actually registered for delivery. So we need to move about 9,000 contracts out into the next month, roll over in the next 3 days, or registered platinum could run out. Will it? Probably not. These things usually get saved at the last minute, but it's always something to monitor that gets exciting in the last days. And we've seen platinum moving out in torrents since July 2021, and it's probably still going to be moving out this delivery month. Finally, we have something going on in GLD. In GLD, the equivalent of SLV in the gold market, we've had huge inflows of 3.5 million ounces since January 2022. So we've seen inflows into SLV, we've seen inflows into GLD, we've seen outflows in the platinum market, and emergency situation in energy markets from the Energy Federation of Traders in Europe. Something is going on, folks. Something is going on in the paper markets, not just in gold and silver. While it is true that banks use paper markets to quote unquote manipulate the price of gold and silver, it is more of a structural issue, in my opinion, that the paper open interest in every futures market is way higher than the physical supplies of the available commodities on planet Earth. And that is why a squeeze everywhere is coming, led by gold and silver at the end, which will collapse the dollar and bring physical reality into line with paper reality by pushing prices of everything much, much higher in the real world. This is the end game that we should all be preparing for. And that end game for silver is that every commodity, instead of being priced in fiat currency, is priced in silver instead.